I think that gold is going to go to a new all-time price high on a closing basis. Right now, the bell to beat is 2,093. What I believe will happen at some point this year is not only will it move back above 2,100 on a closing basis, but then form a base trade sideways or to higher ground. But actually, I'm looking for the pivot when 2,100 is the new 2,000, meaning there is a strong support for that. And when you consider where gold has come from, even recently at the 1800s, we've seen a tremendous move. And I think that there, in terms of investment opportunities, is incredible investment opportunities in the precious metals this year.
According to JP Morgan research estimates, gold prices will peak at $2,300 in 2025. This prediction assumes a Fed cutting cycle initially delivering 125 basis points of cuts over the second half of 2024, pushing gold prices to new nominal highs. In this video, GaryWagner, the editor of thegoldforecast.com, employs Fibonacci extension techniques to predict gold market highs, expecting values to surpass $2,200 soon. If history is anything to go by, then gold's record-breaking performance seen last year could be a taster of what is yet to come in 2024. That's welcoming news for the bulls, but painful for anyone sitting on the sidelines, who must now decide how much FOMO they can handle. Wagner's gold expectations hinged on the performance of the US dollar, which has recently declined by 5% against other currencies. Meanwhile, he emphasizes geopolitical concerns and points out the Fed's actions as a bullish trend in the gold market this year. Gold drifted higher on Friday, buoyed by a weaker US dollar. However, it was set to log its biggest weekly decline in 6 after the Federal Reserve countered wider market expectations of an early interest rate cut. According to Wagner, BRICS is challenging the US dollar, citing an Iran-Russia oil deal. He further suggests their influence, especially from China and Russia, could impact gold prices. A new report says that Russia and Iran have entered into an agreement to avoid using the dollar in bilateral trade, relying instead on their own currencies. Central banks particularly made record purchases of gold in 2022 and 2023, especially after the Ukraine war broke out when Russia and China started accumulating gold as part of a hedging, de-dollarization strategy. Overall, there was a 100% increase in gold accumulation by the world's central banks in 2022 and 2023. Now, we present the clips of Gary Wagner's insights from his recent interview with Soar Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
As you can see, I've done a couple of things with what's called Fibonacci extension, because whenever we're trying to forecast highs that haven't shown up yet, as a technician, we can't go back and look at historically where it is, but we do have this one high, and this comes in above 2150. I've drawn channel lines, so to speak, from these series of lows and these closes here and here. I believe that gold could trade as high as $2,200, $2,250 per ounce this year. Is that sustainable? Well, history has shown that any large spike, and even if you go back to the middle of 2011, where for the first time in history, gold broke above $1,920, or above $1,900 to an intraday high of about $1,920. Well, how long did that last? I believe it was about a day. It came down very sharply. What we saw last year was any move to about 2,000 and above was a signal to short-term traders to short the market and bring it back down. That's not going to change. Anytime we see gold make a new high, we're going to see that get challenged. That's how that market tends to work. It's how most markets tend to work. But I think that right now, what I would look for is 2,093. Now we're sitting at time of this recording at about 2,060. So it's not a really big stretch to go, well, it'll go back to 2,090. The thing is, what I like to look at is, will it do that on a closing basis? And so on a closing basis, I see the challenge being first moving up above 2,100 and then 2,150, which is where that one spike came in, and if that's going to be sustainable. So I think that we've got a solid floor at 2,000, all things being equal. I think that we could see it spike much higher, and I'm expecting it to spike higher. One, based upon the dollar, because the dollar was exceedingly strong last year, moving from the lows below 102, 103 up to 107. And now that's not the highest we've seen it in recent history. We've seen it at 114, but it moved from 107 back down. It's at 102. And that's a 5% decline in the value of the dollar as it pertains to the currencies it trades against. In terms of what we've seen this year, I don't believe it has been all geopolitics, but I think that the tension on two fronts, the Middle East as well as Russia and Ukraine, have not been going away. And I think that that's the scary wild card. But let's leave that for the last thing. I think the first thing is going to be Federal Reserve action, because as they bring down interest rates, that creates bullish momentum, bullish undertones for gold. But at the same time, inflation going down creates bearish undertones. So there's kind of a push-pull there. But I think overall, it's going to create bullish undertones. The other thing is whether or not the BRICS countries who are trying to use their currencies and kind of not to stabilize the dollar, but take it off of its throne as the central currency that the world transacts business with. And when you look at that, and oil, that is being challenged right now. There was an agreement signed by Iran and Russia that they would do their trading of oil in their local currencies. And I think that if BRICS gets a strong foothold with the countries that are there and more countries, and they've got, some very large countries, including China and Russia, that could challenge the dollar as the dominant world currency. If that happens, we could see the dollar lose value as it relates to other currencies. And so that's one thing that we want to look at, because that will have an influence on the price of gold. The second thing is the Federal Reserve, and we kind of touched on that. And the third thing is geopolitics.
During the interview, GaryWagner observed silver's range-bound movement with a short-term ceiling at $26, contrasting it with gold's October rally, which reached a new high of $2,150. He highlighted a potential decoupling as silver's momentum didn't align with gold's. Silver spent the whole year 2023 in the $20 to $26 range. Silver was moving inside a triangle and did not have a real trend, as Treasury yields were rising until October, which was bearish for precious metals. The recent rally was stopped at the high end of the triangle, so silver needs to climb above the $26 level to have a chance to develop sustainable upside momentum. Moreover, he emphasizes the Fed's stance on interest rates in sustaining gold prices. Let's get back to the interview.
It did move much higher. It moved as anticipated, but it was not sustainable. And so the question really becomes, why wasn't it sustainable? And why do we have gold at that area and higher now and seems to be sustainable? And I think the basic answer to that is that the undertones that are moving gold higher now did not fully exist then on a couple of areas. Secondly, 7 months ago, when you would ask the Federal Reserve, when are you going to cut rates? When are we going to see interest rates go down? They would say, we're not even talking about that. And of course, in December, Powell said that we've discussed that and we're planning on cutting rates over the next 3 years, 0.75%, 2024, and so on. So those are the key differences, and the geopolitical landscape is different. And so it's the fact that, historically speaking, the big price moves have been followed by rapid declines. And so when you look at the first big, large price move, it moved for multiple years up to 1900. I mean, we're talking a 10, 12-year period. Once it got there, it broke down. And then for a year and a half to 2 years, I believe, it traded between 1800 on the high and about 1550 on the low. And it kind of bounced back and forth. And then it broke through that. That break took it to the lows. This was February 2015 of 1020. And I remember that month and that date because that's when George Soros started buying a lot of it. And I said, that's telling me maybe it's time to get back in. That is the low. Yeah, what we're looking at is just a silver chart. And to the point that I want to illustrate is, whereas we've seen gold on a slow and methodical climb, when it would hit a new high, it would come down, but it would trade to a higher low. Although we're seeing that in silver, one thing that we have, all of us have noticed that follow silver, is that silver made a high of about $50 when gold traded to above 1900. But since then, on all these subsequent new price highs in gold, we didn't get that follow through in silver. And so silver ceiling has been $30 rather than $50. And so that's a question that has been a quandary. It's been a difficult question to explain rationally. Volume is good, but it still seems as though silver is range bound. There's a ceiling right now, short term, at $26. So when gold spiked up, because these are occurring at the same dates, this is, if we look at it, this is October, the low. So I call it the October rally. This is the spike that we saw when gold hit 2150, and the high that we got in silver was 26. So we got a new all-time high in gold intraday, wasn't on a closing basis. We also, the day before that, got a new all-time closing price. That's what's important to me, 2093. But when you look at silver, it didn't really have that kind of momentum that we saw in gold. That's what tells me that when we want to look at the gold and silver ratio, I think that gold is going to overtake the performance. Although on any given day, you can have silver move up strategically and aggressively, but the same thing occurs when it comes down. But the key is the levels are different. And so, as many analysts have said, and we've all noted, there's been a decoupling between the tandem moves in gold and silver. Silver is much more sensitive to US equities, to global equities, because of its high level of usage in industry and technology. Gold, most recently, has been most sensitive as a safe haven asset. We saw it decline last year, going to a couple of lows, based on the fact that there was over optimism with the Federal Reserve and the data wasn't supporting it, and comments by Fed officials weren't. But ultimately, I believe that it will widen in favor of gold.
Along with central bank interest, increased investor appetite in the physical gold market should also significantly contribute to any 2024 gold rally. What factors do you believe will be the most influential in shaping the trajectory of the gold market in the coming years? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.